Florida's housing market just experienced the worst collapse since 2008. 15 cities saw double-digit price drops in 2025, and the data I'm about to show you proves this is just the beginning. This video contains affiliate links. I may earn a referral fee at no extra cost to you because these are the best tools in the industry. While real estate influencers are still telling you Florida is the promised land, median home prices in Fort Myers fell 23%, Tampa dropped 19%, and even Miami saw corrections nobody predicted. I'm going to walk you through the exact data, showing which cities got destroyed, why this happened faster than anyone expected, and most importantly, what's coming next in 2026. If you own property in Florida, you need to watch this. If you're thinking about buying, this might be the opportunity of the decade, or the biggest mistake of your life. Let's get into it. Here's what everyone missed. For the last 4 years, Florida has been the hottest real estate market in America. Remote workers flooded in from California and New York. Hedge funds bought up entire neighborhoods. Everyone said the same thing. Florida has no state income tax, endless sunshine, and people are never leaving. That narrative just died. Between January and December 2025, 15 major Florida cities experienced price corrections that wiped out billions in homeowner equity. We're not talking about minor adjustments. We're talking about double-digit percentage drops that happened in 12 months. Now here's what kills me. Most real estate agents are still telling buyers that Florida is a safe investment. They're pointing to outdated 2023 data while ignoring what's happening right now in the MLS listings, foreclosure filings, and mortgage delinquency reports. I've spent the last 3 months analyzing county-level data, speaking with local real estate investors on the ground, and tracking institutional money flows. What I found is a perfect storm of factors that nobody's connecting, and it's creating a cascade effect that's going to get worse before it gets better. Here's what we're covering today. The 15 Florida cities where prices dropped 10% or more, with exact numbers, and why each market collapsed. The 5 hidden factors driving this crash that economists aren't talking about. Regional breakdown, which areas are falling first and which might survive. The 2026 prediction, what triggers the next wave and how bad it gets. Your action plan, whether you should buy, sell, hold, or run. Before we dive into the city-by-city breakdown, let me give you a pro tip. If you're buying investment property in Florida right now, or anywhere, do not put it in your personal name. You need an LLC for asset protection, liability protection, and tax advantages. BuyZ makes LLC formation incredibly simple. They handle your registered agent, filing documents, EIN, compliance alerts. Everything starts at just $0 plus state fees. I'll put the link in the description. And once you've got your LLC set up, the biggest mistake I see investors make is messy bookkeeping and missed deductions. That's where doula comes in. They handle bookkeeping, tax filing, and maximize every single write-off. I use them for my real estate holdings, and they've saved me thousands every year. Links for both are below. Now let's talk about what's really happening in Florida. I'm going to walk through all 15 cities, the exact percentage drops, and the specific reasons each market collapsed. Pay close attention because the patterns here reveal what's coming next. City number 1, Fort Myers, down 23%. Fort Myers got absolutely destroyed. The median home price dropped from $412,000 in January 2025 to $317,000 by December. That's a $95,000 loss in 12 months. Why? Hurricane insurance became unaffordable. After Hurricane Ian in 2022 and 2 more major storms in 2024, insurance carriers either pulled out of Florida entirely or quadrupled premiums. I'm talking about homeowners paying $12,000 to $18,000 per year just for insurance on a $400,000 home. When you factor in the mortgage, property taxes, and insurance, the monthly cost became higher than luxury apartments in Dallas or Atlanta. People couldn't afford it. Inventory exploded, buyers disappeared, and prices collapsed. City number 2, Cape Coral, down 21%. Right next door to Fort Myers, Cape Coral saw median prices fall from $385,000 to $304,000. Same story. Insurance crisis plus something else nobody's talking about. Water infrastructure failure. Cape Coral has over 400 miles of canals, and many are experiencing severe saltwater intrusion and algae blooms. The city's water treatment systems are outdated, and repair costs are being passed to homeowners through special assessments. Some neighborhoods are seeing $8,000 to $15,000 surprise bills for infrastructure upgrades. When you combine that with insurance costs, people are fleeing. City number 3, Tampa, down 19%. Tampa was supposed to be the safe Florida market. Tech companies were moving there. The job market was strong, and downtown was revitalizing. Median prices were $445,000 in January and dropped to $360,000 by December. Here's what happened. Property taxes exploded. As insurance companies reassessed risk and property values initially rose, counties increased assessed values. Then, when the market corrected, homeowners got stuck with higher tax bills on homes now worth 20% less. Plus, the work-from-home boom that drove Tampa's growth? That's reversing. Companies are calling people back to the office, and remote workers are realizing they don't need to live in Florida anymore, especially when hurricanes knock out power for 2 weeks every summer. City number 4, Northport, down 18%. Northport dropped from $358,000 to $293,000. This one's personal for a lot of retirees who moved there thinking they'd found paradise. The problem? Healthcare access and heat. Northport doesn't have enough medical facilities for its aging population, and summer temperatures are now regularly hitting 100+ degrees, with heat indices of 115. Air conditioning bills are running $400 to $600 per month. Retirees are doing the math and realizing they can't afford it. Many are moving to North Carolina or Tennessee instead. City number 5, Port Charlotte, down 17%. Port Charlotte saw prices fall from $340,000 to $282,000. Hurricane exposure plus flood insurance requirements killed this market. FEMA updated flood maps in 2024, and thousands of homes that were never in flood zones suddenly required flood insurance. That's an extra $2,000 to $8,000 per year, depending on elevation. Many homeowners didn't budget for it, and when they tried to sell, buyers couldn't get financing without flood insurance included in the mortgage. The market froze, then collapsed. City number 6, Kissimmee, down 16%. Kissimmee is the Orlando tourist corridor market. Prices dropped from $368,000 to $309,000. Why? The short-term rental massacre. Orange County and Osceola County both implemented strict short-term rental regulations in 2024-2025. Investors who bought properties specifically for Airbnb income suddenly couldn't rent them out legally. Thousands of investment properties hit the market simultaneously. Inventory spiked 340% year over year in some zip codes. With that much supply and weakening demand from traditional buyers, prices cratered. City number 7, Deltona, down 15%. Deltona fell from $322,000 to $273,000. This is a bedroom community between Orlando and Daytona Beach. The problem here is commute cost and infrastructure. As gas prices spiked and remote work ended, people realized they were driving 90 minutes each way to Orlando. The roads are congested, there's no public transit, and the cost-benefit equation stopped making sense. Add in rising HOA fees. Many communities saw 30-50% increases, and people started walking away. City number 8, Lakeland, down 14%. Lakeland dropped from $315,000 to $270,000. This was supposed to be the affordable Central Florida option. But here's the thing. Lakeland attracted buyers who were stretched financially. These were first-time buyers, or people priced out of Tampa who took on maximum debt loads. When interest rates stayed high and insurance costs surged, these over-leveraged buyers couldn't make the numbers work. Foreclosure filings in Polk County increased 89% year over year. Distressed sales flooded the market and dragged down prices. City number 9, Palm Bay, down 14%. Palm Bay on the Space Coast saw prices fall from $342,000 to $294,000. Hurricane Nicole in 2022 and subsequent storms caused massive beach erosion. Homes that were 200 feet from the ocean are now 60 feet from the water. Insurance companies are non-renewing policies left and right. Even inland Palm Bay properties are getting hit because the entire regional market psychology shifted from growth story to climate risk. City number 10, Ocala, down 13%. Ocala dropped from $298,000 to $259,000. This is horse country in Central Florida, marketed heavily to retirees. The problem? Ocala has limited healthcare infrastructure, rising crime rates in certain areas, and it is experiencing water supply issues. The Floridan aquifer is being depleted faster than it's recharging, and well water quality is declining. Buyers are choosing other markets instead. City number 11, Spring Hill, down 13%. Spring Hill fell from $305,000 to $265,000. This is another Tampa exurb that got crushed. Long commutes, rising property taxes, insurance costs, and a lack of walkability or amenities. Spring Hill was a drive-until-you-qualify market, and when buyers started actually living there, they realized it wasn't worth it. City number 12, Melbourne, down 12%. Melbourne dropped from $378,000 to $332,000. Space Coast market with similar issues to Palm Bay: hurricane risk, insurance costs, beach erosion. What's unique here? Melbourne has a decent job market thanks to aerospace and defense contractors, which is the only reason it didn't fall further. But even good jobs can't overcome $15,000 annual insurance premiums. City, 913, Pensacola, down 11%. Pensacola fell from $328,000 to $291,000. The Panhandle market has been hit by Hurricane Sally, Hurricane Zeta, and an increasing frequency of major storms. Tourism economy is volatile, and many buyers who moved there for affordable beach living discovered that hurricane cleanup, insurance, and storm prep costs eliminate any savings. City, number 14, Claremont, down 11%. Claremont dropped from $412,000 to $366,000. Another Orlando exurb with similar issues to Kissimmee and Deltona: commute costs, HOA fee increases, and weakening demand as remote work ended. City number 15, Jacksonville, South Side, West Side suburbs, down 10%. Jacksonville overall stayed relatively stable, but the southern and western suburbs saw median prices drop from $348,000 to $313,000 in certain zip codes. Why? Overbuilding. Developers flooded these areas with new construction in 2022-2024. By 2025, supply will overwhelm demand. Builders started offering massive incentives, $50,000 to $75,000 in closing cost credits, which effectively dropped prices even though list prices stayed higher. Now here's what's really important. These aren't 15 isolated incidents. These are symptoms of 5 underlying factors that are going to drive the next wave of collapses in 2026. Let me show you what's really happening beneath the surface. These are the factors that economists and real estate analysts are either missing or deliberately ignoring. Factor number 1, the insurance death spiral. This isn't just about high premiums, it's about market collapse. Here's how the death spiral works. Insurance companies pull out of Florida or raise rates 200-400%. Homeowners can't afford coverage, so they drop it or switch to Citizens Property Insurance, which is Florida's state-backed insurer of last resort. Citizens now has over 1.2 million policies, more than triple what it had in 2020. Here's the problem. Citizens is underfunded for a major hurricane. If a Category 4 or 5 hits Miami or Tampa directly, Citizens doesn't have enough reserves to pay all claims. What happens then? Florida law allows Citizens to levy assessments on every property insurance policy in the state, not just Citizens policies, all policies. That means even if you're with a private carrier, you could get hit with a surprise $3,000 to $5,000 assessment to cover Citizens' shortfall. When buyers and investors realize this, they're going to flee the market. We're talking about a systemic risk that could wipe out Florida real estate values by another 15-20% in a single event. Factor number 2, the climate migration reversal. For 4 years, everyone said climate change would drive people to Florida because northern states would get colder and snowier. The exact opposite is happening. Florida summers are now unbearable. Heat indices of 110 to 120 degrees for weeks at a time. Power grids are strained. Rolling blackouts happened in Jacksonville and Tampa during the summer of 2025. Air conditioning costs are making homes unaffordable to operate. Meanwhile, climate change is making northern states more temperate. Winters in North Carolina, Tennessee, and Virginia are milder. These states don't have hurricanes. They have lower insurance costs, lower property taxes, and a comparable cost of living. I'm seeing data from moving companies showing that Florida outbound migration exceeded inbound for the first time in a decade during Q3 and Q4 of 2025. That trend is accelerating. When the migration reverses, prices collapse. It's that simple. Factor number 3, the over-leveraged investor tsunami. Between 2021 and 2023, institutional investors and small-scale landlords bought Florida properties at peak prices with the expectation of continued appreciation and strong rental income. Both assumptions are now wrong. Property values are down 10 to 23% as we've seen. Rental demand is softening as people leave Florida. Meanwhile, landlords are dealing with insurance costs that are 3 to 4x higher than they underwrote, property taxes that went up even as values went down, and maintenance costs that skyrocketed. Here's what I'm hearing from investors on the ground. Cash flow has turned negative on properties that were supposed to generate $500 to $800 per month in profit. When landlords can't cover carrying costs, they sell. When hundreds of investors sell simultaneously in the same market, you get a foreclosure and distress sale wave that creates a downward spiral. I'm tracking foreclosure filings in these 15 cities. They're up an average of 62% year over year. That inventory is going to hit the market in 2026, and it's going to push prices down another leg. Factor number 4, the affordability lockout. Here's the math that's killing Florida real estate. Let's say you want to buy a $350,000 home in Tampa today. Add $1,200 a month for insurance, being conservative. Add $450 a month for property taxes. Add $300 a month for HOA fees, if applicable. Add $500 a month for air conditioning in summer. Your true monthly housing cost is $4,150. To afford that comfortably at 30% of gross income, you need to make $178,000 per year. The median household income in Tampa is $66,000. Do you see the problem? Florida real estate is now affordable only to the top 15-20% of earners. You've priced out the entire middle class. When the buyer pool shrinks to a fraction of what it was, prices have to fall. There's no other outcome. Factor number 5, the infrastructure crisis. Nobody's pricing in. This is the one that's going to blindside people in 2026. Florida's infrastructure, water systems, sewage, roads, power grids, was built for 15 million people. The state now has 23 million residents, and the infrastructure hasn't kept pace. Water. Saltwater intrusion is contaminating coastal aquifers. Cities like Cape Coral, Fort Myers, and Miami are facing billions in required upgrades to water treatment systems. Sewage. Septic systems are failing across central Florida. Counties are requiring homes to connect to the central sewer at costs of $20,000 to $40,000 per property. Power. The grid can't handle AC demand during peak summer. Rolling blackouts are becoming normal. Roads. Traffic is unbearable, and there's no funding for major highway expansion. All of these costs get passed to homeowners through special assessments, higher utility rates, and property taxes. When buyers realize they are not just buying a house, they are buying into a decades-long infrastructure crisis with six-figure repair bills, they stop buying. Now here's where it gets really interesting. Not every Florida city is collapsing at the same rate. Let me show you the regional breakdown and which areas might actually survive. let's talk about where this is happening and why geography matters. Florida isn't one market. It's 6 distinct regional markets, and each one is experiencing this collapse differently. If you understand the regional dynamics, you can predict what's coming next. Southwest Florida. Ground zero for the collapse. Fort Myers, Cape Coral, Naples, Port Charlotte. This entire region is the epicenter. Why? This is where hurricane risk, insurance crisis, and water infrastructure failure all converge. Lee County and Charlotte County got absolutely demolished by Hurricane Ian, and the psychological impact is permanent. Buyers are done. Investors are liquidating. Even retirees who moved there 5 years ago are selling at a loss and leaving. My prediction: Southwest Florida loses another 10 to 15% in 2026. We're talking about prices falling back to 2018-2019 levels. If you own property here and you're not cash flow positive, get out now before the next wave hits. The only way this region recovers is if the federal government steps in with massive insurance subsidies or climate adaptation funding, and that's not happening. Tampa Bay Metro, the slow bleed. Tampa, St. Petersburg, Clearwater, and the surrounding suburbs are experiencing what I call a managed decline. Unlike Southwest Florida, Tampa has a real economy: healthcare, finance, tech. That's providing some floor support. But the area can't escape the insurance crisis, property tax explosion, or hurricane risk. Here's what's happening. High-end properties near downtown Tampa and St. Pete are holding relatively stable. It's the suburbs, Brandon, Riverview, Wesley Chapel, Spring Hill, that are collapsing. Why? Suburbs attract middle-class buyers who are most sensitive to affordability. When total monthly costs hit $4,000 plus, these buyers disappear. My prediction: Tampa Metro drops another 8 to 12% in 2026, with suburban areas falling hardest. The core urban neighborhoods might stabilize if the city can attract more corporate relocations, but that's a big if. Central Florida, the Airbnb graveyard. Orlando, Kissimmee, Davenport, Claremont. This region is littered with failed short-term rental investments. Between 2020 and 2023, investors bought tens of thousands of properties within 30 minutes of Disney World, expecting to make $40,000 to $60,000 per year, renting them on Airbnb and VRBO. Then, counties cracked down on STR permits. Disney raised ticket prices to the point where family vacations became unaffordable. Travel patterns shifted post-COVID, and suddenly these investors are stuck with empty houses and $4,000 month carrying costs. The distressed sale wave is just beginning. I'm seeing properties that sold for $425,000 in 2022 now listed at $315,000, and they're still not selling. My prediction: Central Florida investment corridors drop another 12-18% in 2026 as the foreclosure wave peaks. Traditional family home neighborhoods might only fall another 5 to 8%, but the investor-heavy areas are going to get crushed. If you're thinking about buying a foreclosed Airbnb property, maybe it can work out for you. But make sure you can carry it long-term as a traditional rental, because the STR dream is dead. The fourth Florida real estate location I'm going to talk about is Southeast Florida, the resilient giant. Miami, Fort Lauderdale, West Palm Beach, Boca Raton. This is the one region that's held up relatively well. Yes, some suburban areas saw 10 to 12% drops, but Miami proper, Coral Gables, Coconut Grove, these areas are only down 3 to 6%. Why? International buyers. Southeast Florida attracts wealthy buyers from Latin America, Europe, and Canada, who view Miami real estate as a hedge against instability in their home countries. These buyers pay cash, so interest rates don't matter. They budget for high insurance because they're comparing it to São Paulo or Caracas, not Cleveland. Plus, Miami has a legitimate global city economy. Finance, international trade, crypto, tech. There are high-paying jobs that support the real estate market. My prediction? Southeast Florida drops another 5 to 8% in 2026, but then stabilizes. This region has a floor. It's expensive, but it's also the most economically diversified part of Florida. If you're going to own Florida real estate long-term, this is where you want to be. But even here, avoid flood zones and properties that require $12,000+ annual insurance. And the last real estate location that's still holding up is Northeast Florida, the overbuilt surprise. Jacksonville, St. Augustine, Palm Coast. This region wasn't supposed to collapse, but parts of it did. Jacksonville's problem is overbuilding. Developers went absolutely insane from 2021-2024, throwing up subdivisions as fast as they could get permits. By 2025, supply will overwhelm demand. Certain zip codes saw inventory spike 400%. New construction sat empty for months. Builders started offering $75,000 in incentives, free upgrades, closing costs, rate buydowns, which effectively crashed resale values. My prediction: Jacksonville suburban areas drop another 8 to 10% in 2026 before finding a floor. The core urban neighborhoods, Riverside, San Marcos, Springfield, will hold better. St. Augustine and Palm Coast face hurricane risk similar to other coastal areas, so expect continued softness there. The good news about Jacksonville: it's affordable relative to other metros. It has a growing job market, logistics, healthcare, military, and it's attracting corporate relocations. This region recovers faster than Southwest or Central Florida. The Panhandle, tourist town trouble, Pensacola, Panama City, Destin, Fort Walton Beach. These markets are stuck in tourist economy volatility. When the economy is strong and people travel, these markets boom. When a recession hits or hurricanes destroy beaches, they collapse. There's no diversified economic base. My prediction: Panhandle markets drop another 10-15% in 2026 and stay depressed for years. These are not long-term investment markets unless you're buying severely distressed properties for short-term rentals and you understand the risk. So here's what you're probably thinking: when does this end? What's the bottom? And what do I do? Let me give you the 2026 prediction. I'm going to give you the 3 triggers that push Florida into the next wave of collapse in 2026, and why this gets worse before it gets better. Trigger number 1: the major hurricane that breaks the system. Florida has been lucky. Despite multiple storms in 2024-2025, we haven't had a Category 4 or 5 make direct landfall on Tampa or Miami since the insurance crisis started. That luck is going to run out. Hurricane season 2026 is forecasted to be hyperactive. NOAA is predicting above-average storm activity due to warming Atlantic waters. When, not if, a major hurricane makes direct landfall on Tampa Bay or Southeast Florida, the insurance system collapses. Citizens' property insurance gets overwhelmed. Claims take 18 to 24 months to process. Homeowners can't rebuild. Property values in affected areas drop another 20-30% overnight. And here's the nightmare scenario: the statewide assessment gets triggered. Every property insurance policy in Florida gets hit with a $4,000 to $6,000 special assessment to cover citizens' shortfall. When that happens, the entire state's real estate market freezes. Nobody can sell because buyers refuse to take on that risk. Foreclosures spike. Prices collapse across all regions, even the ones that weren't hit. This is the black swan event that turns a 15 to 20% correction into a 40-50% crash. Trigger number 2: the recession convergence. The U.S. economy is heading into recession in late 2026. I'm not saying this to be dramatic. I'm looking at leading indicators. Consumer debt is at record highs. Credit card delinquencies are rising. The labor market is softening. When a recession hits, unemployment rises, and over-leveraged homeowners can't make their mortgage payments. Florida is especially vulnerable because so much of the recent buying was done by people who stretched to afford homes at peak prices with maximum debt loads. When unemployment ticks up even 2 to 3%, foreclosure filings are going to explode. We're talking about a 2008-style foreclosure wave, except this time it's concentrated in Florida instead of being nationwide. The distressed inventory hits the market in Q3 and Q4 2026, and prices take another 10-15% leg down. Trigger number 3, the institutional investor retreat. Between 2021 and 2023, institutional investors, private equity firms, hedge funds, Wall Street landlords bought over 80,000 Florida properties. These aren't mom-and-pop landlords who hold forever. These are funds with performance targets, investment committees, and quarterly earnings calls. When Florida properties stop appreciating, when cash flow turns negative, when insurance costs blow up their underwriting models, they sell. And when institutional money exits a market, it doesn't trickle out slowly. It floods out in waves. I'm already seeing early signs, large portfolios being quietly listed, bulk sales to distressed buyers at 20-30% discounts. In 2026, this becomes a stampede. When you have thousands of institutional-owned properties hitting the market simultaneously, it overwhelms demand and crashes prices. So here's the timeline. Q1 2026. Foreclosure inventory builds. Markets stay soft but stable. Q2 2026. Hurricane season begins. Insurance renewals hit, and people realize they can't afford another year. Q3 2026. Major hurricane makes landfall, statistically likely. The insurance crisis is critical. Q4 2026. Recession hits, unemployment rises, foreclosures spike, and institutional investors exit. By January 2027, Florida median home prices are down 25-35% from their 2022-2023 peaks in the hardest hit markets. Southwest Florida, Central Florida investment corridors, and overbuilt suburban areas get hit hardest, 40-50% total decline from peak. Southeast Florida and core Jacksonville hold better, 15-25% decline from peak. Now here's the question you're asking. What the hell do I do with this information? Let me give you the action plan. If you own Florida real estate right now, here's what you need to do immediately. First, calculate your true carrying costs: mortgage, insurance, taxes, maintenance, utilities. If you're cash flow negative or barely breaking even, you need to sell now before 2026. I know that's hard to hear. I know you don't want to take a loss. But taking a 15% loss today is better than taking a 35% loss in 18 months. The market is not coming back in 2026. Second, if you're in Southwest Florida, Central Florida investment corridors, or suburban Tampa, get out. These markets are going to get destroyed. List your property now, price it aggressively, and move on. Third, if you're in Southeast Florida core areas or urban Jacksonville and you're cash flow positive, you can hold. These markets will stabilize faster. But make sure you have 12-18 months of reserves because it's going to get worse before it gets better. Fourth, refinance if you can. If you're sitting on a 7% mortgage and rates drop in 2026 due to a recession, refinance immediately to lower your carrying costs. And fifth, this is critical. Make sure your property is in an LLC, not your personal name. If you haven't done this yet, you're exposed to massive liability. One slip and fall lawsuit, one tenant dispute, and they can come after your personal assets. If you're thinking about buying in Florida, wait. Just wait. I know you're seeing deals. I know prices are down 20%, and you think it's the bottom. It's not. We're in the second inning of a 9-inning game. If you must buy right now, here are the rules. Only buy in Southeast Florida core areas: Miami, Fort Lauderdale, Coral Gables, Boca Raton. Avoid everything else. Only buy properties where the total monthly cost, mortgage plus insurance, plus taxes, plus HOA, is below comparable rent. If rent is $2,800 and your total cost is $3,400, don't buy it. Demand a 20-30% discount from 2023 peak prices. If sellers won't negotiate, walk away. Get a property inspection that specifically checks for hurricane damage, water intrusion, mold, and septic sewer issues. Florida homes have hidden problems. Budget $15,000 per year for insurance and verify coverage is available before you close. And here's the big one. Plan to hold for at least 10 years. If you're buying Florida real estate in 2025-2026, you're buying for long-term cash flow, not appreciation. Appreciation is dead for the next 5-7 years. If you're a real estate investor looking for opportunity, this is where it gets interesting. The 2026-2027 distressed wave is going to create generational buying opportunities, but only if you have cash, only if you understand the risks, and only if you're buying in the right areas. Here's the strategy. Wait until Q4 2026 or Q1 2027 when foreclosure inventory peaks. That's when you get the best deals. Target foreclosures and REO properties in areas with economic fundamentals. Jacksonville, Southeast Florida, maybe core Tampa if the market stabilizes. Avoid Southwest Florida, tourist towns, and anywhere that requires flood insurance over $3,000 a year. Buy all cash if possible. Financing is going to be difficult, and you want to move fast on distressed deals. Plan for long-term rentals, not short-term. The Airbnb model is dead in Florida for the next decade due to regulations and oversupply, and for the love of God, put every property in its own LLC. If you're buying 5 rental properties, that's 5 separate LLCs. Protect yourself. Here's the bottom line. Florida's housing market just experienced the worst year since 2008, and 2026 is going to be worse. 15 cities saw double-digit drops. The insurance crisis is unsolvable. Climate migration is reversing. Over-leveraged investors are liquidating. This is not a buying opportunity yet. This is a get to safety and wait for the real bottom moment. If you own property in the wrong areas, sell now. If you're thinking about buying, wait 12-18 months. If you're a cash investor, get ready for late 2026 when distressed inventory peaks. And if you're doing any of this, buying, selling, holding investment properties, make sure you've got your asset protection and tax strategy handled correctly. That's where Bazzi and Dula come in. Bazzi handles your LLC formation, registered agent, filing, EIN, compliance, everything for $0 plus state fees. Dula handles your bookkeeping, tax filing, and makes sure you're not leaving money on the table with missed deductions. I use both for my real estate portfolio. They've saved me tens of thousands of dollars and protected my assets. Links are in the description. Don't skip this step. If this video helped you, hit that subscribe button. Drop a comment below and tell me, what are you seeing in your local Florida market? Are prices dropping where you are? Are you buying, selling, or holding? I read every comment, and your real-world data helps me understand what's happening on the ground.